Okay, I'll call the meeting to order. Jeff, can you do the roll call?
Hold. I'll let you guys know.
Okay.
I got to get the broadcast out.
Okay.
All right, now you're set.
Okay, now I'll call the meeting to order.
Okay.
And Jeff, can you do the roll call?
Yes, members are asked to signify their presence when their name is called. Councilor Braverman.
Here.
Mr. Lavariere. Mr. Sharma.
Here.
Mr. Castell.
Here.
Mr. Johnson. Ms. Schulman. Mr. Slusarski.
Here.
Mr. Trister.
Here.
Mr. Mankey.
Here.
You have a quorum.
Thank you. Okay, any public participation?
Nobody on the public side.
Okay, that takes care of that then. So we're here to then discuss and take action on the recommendation to the town council for the placement of insurance. Jeff, you want to give us or Jason?
Yeah, we have two representatives today from the agent of record, Jason Guerrera and Jill Peters, and I believe that they are prepared to present this material to the committee for your consideration.
Okay, Jason, you want to take it away then?
Yeah, absolutely. And I know you guys know who I am, but I don't believe you've been introduced to Jill. Jill, would you mind just introducing yourself to the committee?
Sure, no problem. I'm Jill Peters. I am the team leader for our public entity unit in the Meriden office. I've been with USI for just about 10 years, and I'm happy to be with you guys tonight.
We're happy to have you.
Awesome. Jeff, would I be able to share my screen? Will allow me to share my screen here if I have a PowerPoint?
Yep, you're all set.
Yes, you should. Yes, you can.
Let me get that rolling here. All right, do you see my screen?
Yep.
Yes.
Wonderful. Excellent. All right, so we've been working, Jill, myself, and Lynette, who unfortunately couldn't be with us tonight, have been working on the insurance renewal for the town. I've been in talks with Ashley Rita, who is the underwriting manager from Kerma, who is working on the insurance renewal for the town of Newington. And we do not have formal quotes as of yet. So what I wanted to take today was to bring you up to speed on what we're expecting for the market. Just this past June, we updated our property and casualty market outlook. So we'll just go over that briefly. We'll go over some historical premium data for the town, because I know there's some familiar faces here, but also some new to the committee. So I thought it'd be helpful to give some prior context on how historically the town has performed. And then we'll talk about our plan over the next 12 months as we look to, as we'll recommend to our recommendation to the committee and actions moving forward over the next fiscal year. So these are the average carrier rate trends for our property casualty outlook. We have a full market outlook is available. There's a hyperlink below. I can share that with the committee. You're happy to go online and download the full report. It's about 36 pages long. It goes through our different industry specializations, such as construction, healthcare, a public entity, aviation. But it will kind of give you the sense of what the current market conditions are, currently what we're forecasting over the next 12 months. Historically, so over the last 3 quarters, we've seen, we're hopeful that the worst of the hard market is behind us. There are some lines like cyber liability and excess liability where we are still continuing to see sustained rate need from the insurance carrier. But overall, we're hopeful that over the next 2 to 3 quarters, we will begin to see the rate need begin to ease. But we're not quite out of the woods yet. The primary drivers, as I mentioned, excess liability, which for towns like Newington, what's really driving that is the law enforcement exposure, and obviously cyber liability as well. So just some quick historical data on the town. 2019, the Standing Insurance Committee at that time had agreed to sign a rate lock agreement, which would give, KERMA's which would provide limitations for KERMA to increase the town's insurance premiums. And in return, the town would just promise to not bid out the insurance to other carriers. And the 2019, 2020, and 21 were the 3 years, and those were the three corresponding premiums with those policy years. As you can see, 2021, fiscal year 21, there was a much larger increase than in prior years. What primarily drove that increase was the town has an additional $15 million umbrella, which sits over on top of the town's $10 million umbrella, which comes standard as a KERMA member. And the reason for that is ultimately your guys' ongoing school bus operations. And we had recommended to the town at that time to maintain that $15 million limit, as our other towns who have a school bus fleet have higher excess liability limits. So even though it was a primary driver of the town's premiums, we recommended that they would keep that level of coverage at least until the town decides to divest the fleet, which I believe is an ongoing discussion with the town. But that's something that was the primary driver of last year's premium increase. And the other is that the $15 million umbrella is not subject to KERMA's rate lock agreement. So, the rate increase for that $15 million umbrella can be greater than the 7.5% as part of KERMA's agreement. And as I noted, the rate lock agreement expires July 1st of this year, which could allow USI to fully remarket the liability in workers' comp for fiscal year 23.
Jason, just a quick question on the premiums. That was without the umbrella?
That is with the umbrella.
That is with the umbrella.
Yes.
Okay. But even 2021 is still under, it's close to 10%, I guess. But
yeah, it ended up being a tad over the 7.5 if you included that. I think the rate need for the umbrella for the 21 year was 25%, which seems a lot, but that was at the time and still is what we're projecting for carrier rate need for excess liability above 10 million. So we did go to market because that $15 million umbrella is placed by KERMA, but we attempted to find an alternative carrier for that line item, and we found at that time that KERMA remained to be the cheapest option. Any other questions? So the next slide I'll go over briefly is the retro program. So part of, for this renewal, what we were asked by the committee to do was review the most recent workers' comp retro adjustment from KERMA. Typically, the second adjustment, which is 18 months following the policy period, there's typically not a whole lot of difference between the first and second adjustment. And that second adjustment, there was quite an increase in premium. So we went to just verify that the numbers were correct. And they are. And so just for the committees, because I understand not everyone knows or may not know exactly how a workers' comp retro program functions, I myself had to give myself a refresher course. So this is ultimately how the program functions. So you have basically so in essence, in layman's terms, when someone says a retro program, it's essentially a program that allows the town more efficiency in how you pay your workers' compensation premium, but doesn't have the risk that being fully self-insured does, which I believe the town many years ago was at that time. And so this program provides some of the benefits of being fully self-insured without all of the risk, in essence. It's a very unique program. The town, as I mentioned last month, the town of Newington is one of the only towns still left in this KERMA program, but it remains to be the most competitive, unless the town wishes to entertain self-insurance, but that we can review that. We can always revisit that at a later date. So you essentially have your basic factor, which is your expenses multiplied by your standard premium. And I tried to lay this out as in layman's terms as best as I can. But does this follow form for everyone. Anyone else? Does anyone have any questions about how this is kind of laid out? So that 728,409 at the bottom is how Kerma came up with that last adjustment figure. And these are all the calculations and formulas that went into that, which we were able to verify with Kerma.
And Jason, what was the original premium we paid on this policy at the beginning? You know?
So the original premium before was $635 and change. So it was about $100,000 jump. And the reason for that is just increase in losses because the expense factor is fixed. Anything above the basic, which that is that 326, that's the lowest that your program can possibly base, right? It's the minimum.
Yeah.
So anything above the 326 is just pure losses, developed losses through the loss. And one of the things too is that when we looked at other retro programs, which they're like Travelers, for example, has a retro program option, the loss development factors are typically 3 to 5 times what Kerma is charging for their loss development factors. The fact that you only have a 1.2 is the absolute best. And we have an analyst within USI that reviewed this program as well. And he agreed that the way that this program is set up is very competitive compared to the rest of the marketplace.
Okay. And do you know what the max premium is? Because we can have one more adjustment, right, on this?
Yeah. So the 728 was the second adjustment.
Oh,
so,
it was. Okay.
Yeah, it was. And the max is 8. Sorry, I didn't want to cram these slides too bad with information, but I have it right. It's like 826,000 and change.
Okay. This is a second and final adjustment, or we get a third adjustment? This is the final adjustment.
Yep, correct.
Okay.
Yeah, you get 2. Yep.
And
Let me just verify.
may I ask, do I raise my hand?
Absolutely, Clark.
Good.
Okay. Which underwriting year is this?
This is for 21-22.
Okay, we've already had 2 adjustments.
Yeah, so the next adjustment will be 12/31 of this year. That will be the 6-month adjustment for the next. So Kerma is going to present a renewal for 22-23, and then on 12/31/22, that will be the first adjustment of
the next
that policy year.
Yeah.
I'm surprised it's that quick. I thought it was 6 and 18 months after. I guess I have to go back and look at my old notes.
It is 6 and 18 months.
Yeah,
Well, how come this one's at 12 then?
Yeah, this can't be the current year.
Yeah, this has to be the prior year, if that's 18 months.
Oh, I said 12 months on the slide. I'm sorry. It is 18 months. You're right. So this.
But if it's 18 months after the policy year, that's got to be fiscal year 2021.
That's correct.
Okay.
That's
All
correct.
Right.
Yep.
All right. So we still.
Yeah, sorry, I do not have. So Kerma has not yet provided any fiscal year 22 numbers yet. So this is we're just looking at fiscal year 21.
Okay. All right.
Sorry for the confusion.
Yeah, no worries. Just wanted to make sure I understood.
Thank you.
Clark, are you okay with that?
Okay, so there's going to be one more.
No, not on this one, Clark.
Yeah, not on this one.
No, this is the 2021, which we just got the 18-month after the policy year adjustment based on year end. And we don't have the first adjustment yet for the 21-22 year.
Right.
Based on my understanding.
Oh,
Jason
yes.
can confirm that.
Yep, that's correct.
2021, meaning 2020 to 2021.
Yeah, right.
Yes.
Oh,
Yes.
I misunderstood that. And that's okay.
Yeah. No, me too at the beginning until we talked it out. But
Okay. So it's 20.
Yeah, I had put 12 months, which actually made me misspeak, but it's 18 months, not 12. That's a typo.
Okay, 2020 to 2021. Got it now. Okay. Sorry.
It's retro stuff, man. It's great.
yeah, Clark used to underwrite this stuff, so he's all
That's
over.
right.
I did this
What
for a living.
better man, right?
Yeah.
Well, that's right.
Why I'm on the committee.
That's right.
Okay, thank you. I'll lower my hand. Here we go.
So our recommendation for the committee. So the rate lock agreement expires July 1st of this year. So what we would really like to do, because it's been quite some time since the town has really been out to market, and I mean there are a lot of benefits to Kerma, and we work with Kerma. We probably work with Kerma on over 30, 35 towns. So we have a great working relationship, but that doesn't mean that we should at least check the marketplace once every several years just to benchmark them versus the other carriers in the marketplace. Because the town has the retro program, really the best fit for the town, other than Kerma, would be Travelers Insurance Company. They are able to provide a liability auto property program in addition to a retro program that would be similar to the town. If the town wanted to entertain going in a different direction on the workers' comp, for example, being if you were self-insured on the workers' comp, that would open us up to different liability markets. But until that time comes, which sounds like the retro program, I think, is here to stay. So ultimately, Travelers is going to be the best next option for the town, other than Kerma. So what we like to do is we like to introduce the Standing Insurance Committee to Travelers. They do a great capabilities presentation, and we'd like to have that sometime in the fall. And we'll kind of go over a brief timeline for fiscal year 23 on the next slide. But for the time being, if Kerma does offer a rate lock renewal for fiscal year 22, we would recommend that the committee hold off on signing that until fiscal year 23. We've done this in prior years where Kerma will offer a re-up on the rate lock, and it's perfectly okay to say to Kerma, hey, look, we're going to wait a year to sign this. We're going to go to market, and that's perfectly acceptable to do. So
Okay, and they're willing to do that, because last time we sort of heard that if we didn't sign a rate lock, then we weren't sure that they'd give us a rate lock the following year or something.
Well, rate locks are never guaranteed, but historically, in dealing with towns that have been offered rate lock agreements, Kerma is they're an insurance. Even though they're a pool, they're still an insurance company.
Right.
So retention's important to them. And because we have Kerma trusts us, and Jill and our team worked really hard to build a really long-standing and meaningful relationship with Kerma. So, something that comes from us carries more weight than if it comes from anyone else, because they know we have integrity and we're honest about the process. So.
Okay. Yeah, I guess the only thing I would say, if they offer something incredible per rate lock, then it may make sense to do it. But
yeah, right. If it's a great deal.
Yeah.
Historically, what Kerma does is they typically offer they'll offer like a flat renewal for the first year, and then like what they did for the last rate lock, so it's 0%, and then they'll do the second and third year will have like a 5 to 8% lock. But I think historically, Newington's what ends up happening is you take those 5 to 7% increases over 6 to 8 years, and that adds up over time. So they do provide a nice cushion, because in terms when you're thinking of your budget for the next fiscal year, you're like, okay, here are the limitations I can work with.
Right.
But in all reality, the other carriers outside of Kerma, and Jill can certainly speak to this as well, they are hungry to grow just like Kerma is. So.
Okay.
Jill, do you have anything else to add? I don't know if I missed anything, if you want to expand on anything I said.
Just a couple comments on rate locks and the marketing process. I've never seen Kerma not offer a rate lock as part of a proposal when a member has gone out to market. Jason may have already stated that, so I wouldn't let the fear of that dissuade you from going out to market. The benefit of doing that too is you can kind of benchmark and confirm that you are getting a good deal without any other information to compare what you're paying. You don't really know whether or not you are truly getting a good deal. And at the end of the day, it may turn out that Kerma is still the best fit for you, but you can say to yourselves, and you can say to the residents of the town, we did take the insurance out to market. We got quotes from 2 carriers. Kerma is still the best program for the town's needs and for the town's budget at this time.
Yep. Do you have any concerns that the current inflation rates are going to really influence premiums going forward?
When you talk about inflation rates, are you talking about like construction materials or inflation rates with everything, gas,
Well,
groceries?
construction, social inflation,
Yes, yes. So, in the industry in general, not just with public entity clients, but in every sector, as you can imagine, manufacturing, distribution, real estate, restaurants, wholesalers, even social service, nonprofit clients, we are seeing some premium increases because of, the social inflation verdicts with auto losses. We're seeing significant premium increases in sexual abuse and molestation coverage because of large verdicts being put out there. I think Boy Scouts of America and the Catholic Diocese are probably the two most prominent large verdicts that have come out recently. Concussion, TBI, those types of injuries as well. In the excess market, we're seeing some premium increases there. And on the property side, what we are seeing is every insurance company, and Kerma may already be doing this. I apologize. I don't know your statement of values personally, but I have seen on other members I work with, they are keying in on the largest buildings. So typically your schools, right? Your high school, your middle school, if you've got more than one middle school, the larger valued buildings. Taking a look at the current replacement costs, running what we call a replacement cost estimator, just to make sure that the cost per square foot is adequate for today's construction costs. So all insurance companies are doing that, and we are seeing increases in that part. What they're trying to do is minimize any additional rate need. So if they have to increase your total insured values by, say, 20%, and I'm just throwing out like an even number there, what they would do is they would not then raise your rates another 5%. So they're getting their money from the increase in the values instead of increasing the rates.
right? But they still get 20% more. So
yes, yeah, yes.
No matter how
you're not getting 25%.
Yeah, right. Oh, that makes me feel better.
Yeah. Well, Jill touches on a good point, and I've asked Kerma for the town. I've asked this because they do this. They have done this for other towns too. Kerma works with a management company called CBiz. You may have heard that name before. They're a management. They're basically a management consulting company that does schedule value estimations. And so CBiz and Kerma have been partnering, and they've been going around to different member towns and doing these reevaluations. So as part of this marketing process, I'm sure that Kerma will be asking CBiz to do that for the town. It's been some time just looking through the file. Actually, Jill, it's funny you mentioned the schedule. It's been a few years since Kerma has updated the schedule values from CBiz or from anyone. So it's something that we'll anticipate them doing for this coming year, especially as we look to do the marketing, and also because obviously it's in Kerma's best interest for their reinsurers as well to make sure that they're properly insuring their members to value. So it's something that as Jill touched on with the increase in inflation, especially for buildings, because a property loss, what was $100,000 property loss is now a $300,000 or $400,000 property loss. And so when you think of how much should I insure my buildings for, it becomes an important part of the conversation. So
just one other question too. I don't know how to answer. There's some people on the committee that are sold on retros. Some of us aren't. For workers' comp. So I don't know if it would be a benefit just to look at some, if we self-insure, just to get a feel for what it would be.
I will say historically, and it's funny too, because the Newington, when we look at Newington versus our other towns, you guys fall into a population range where many of our other clients fall into. And in that population range, I would say a majority of towns are self-insured. And there are benefits to self-insurance, and there is a potential for additional efficiencies, because like the expense factor, I mentioned that basic factor, right, was $326,000. In excess workers' comp policy for the town, that would be basically the equivalent of your expense factor, would be like $120,000.
Right.
Not counting your TP, because you'd have to hire a third-party administrator to manage the claims and whatnot. And so there's definitely an opportunity there. However, there's obviously additional risk as well. So when we're going through the marketing process, maybe when we look to reconvene in the fall for a capabilities presentation, we can we'll do an analysis of your claims. And basically what we can do is we can do like a 5-year look back to say, hey, if you were self-insured for the last 5 years, how would have that panned out? And, versus the retro, we can kind of give the committee a directionally correct sense of, hey, is this a good idea or not? And self-insurance, you're going to lose. Typically 1 out of every 5 to 6 years you lose.
Right.
But it's the hope that the other 4 or 5 years that you make out on it more than offsets the year or 2 that you lose. And because typically the retentions on self-insurance are about $1 million per claim. So you have to think every claim that the town gets, you're on the hook for up to $1 million for every
Right.
claim. So, but there's pros and cons, but we can certainly help, we can advise the committee as we go through the next fiscal year. We can help walk you through that and what that would look like. And retros are, they're not as popular as they used to be. Most have moved to self-insurance, but it is kind of, I think the town has continued for so many years because it's really a nice fit in between like a deductible guaranteed cost versus self-insurance.
Right.
But once you get to a certain, critical mass, it starts to it could become a little unwieldy where self-insurance would make more sense. So.
Yeah. Well, I think my understanding, and Jeff, you can correct me if I'm wrong. It was really because we got burnt on a self-insured policy in the past. It came in very late, and we had a late development on a particular claim. And the feeling is, well, now we're done after 18 months after the policy year, right? We have nothing more to worry about. It's not going to develop anymore. So,
right.
Yep. And every town has a different. We have clients that want to increase their deductibles and retentions. We have clients that want to decrease them. It's all about the risk appetite, budgets, and all of that. So. But certainly we can kind of do that analysis for the committee as we get closer to the fall, and that will help kind of dictate our efforts. And we'll do that on the liability side too, because the other thing that's interesting is even just taking like a $10,000 or $20,000 deductible on the liability side can sometimes offer some increased cost efficiencies as well. As long as you're not getting killed on auto is usually the big driver of liability of lap premiums. So
right.
It's something that we can play with to just find different ways where we can increase efficiency without adding additional cost.
Yep. Okay, thanks.
And then just the last bullet point here, we are working, Lynette is working diligently on a cyber quote for the town. We have 3 pending quotes, which we'll hope to have this week, and we'll advise the committee as soon as we have something in.
Yeah, I was just at a seminar this afternoon that they said municipalities' cyber rates were up like 200 to 300%.
Yeah.
Scary.
Yeah, our indications from our market outlook was up to 250. That's right in the ballpark. But you also have to remember too, like the premiums were like $8,000 to $10,000.
Oh yeah.
You know what I mean? So I mean, if you think 250% sounds like a lot, but that's going from $10,000 to $25,000. So
yeah,
it's still a big increase, no doubt. But I think because the premiums I think carriers came out of the gate way underpricing this stuff, not realizing what the potential ramifications could be. Yep. And it's just taking them this long to catch up. Same thing with liability premiums. Like we mentioned earlier, 10 years ago, it was so rare that you would see a claim pierce the umbrella. So carriers were just giving it away for nothing. And now, I mean, so much has changed in that amount of time. They have to play all that catch up.
Yeah, one thing I'd appreciate too is you doing a comparison of our limits versus other municipalities, because when we first got cyber, it was so cheap.
Yeah.
That we decided to get a higher limit on it, like 2 million, I think.
Yep.
So we just like to hear your and Joe's opinion and Lynette's opinion on, how we compare to other municipalities and what we should have for cyber.
Good idea.
Yeah.
What's the rough population size for Newington right now?
30,000.
30,000. Yeah.
Okay.
29,900.
So most of the peers around that size are purchasing $1 million in cyber liability. So there's two things that kind of go into selecting the limit for you guys, right? It's how much can you afford to pay for, and how much limits are available. 5 years ago, we probably could have gotten a $5 million limit for a very reasonable price. It's tough to find carriers right now that are willing to put out more than $1 million on municipal risks. I have one client whose population size is around 90,000, and they were able to get a policy for $3 million. Now, a lot of that is because of the controls that they have in place for multi-factor authentication. Jason, what's the other?
Endpoint user detection.
Thank you.
Yep. Next generation.
Your ransomware controls, basically.
Right.
So at this point, if you've been able to get a $2 million policy, I think that's great. If you were to reduce it, I don't know for sure that we would ever be able to get it back.
Okay.
There are some excess cyber markets out there, but again, the premiums are going up, the capacity is shrinking, and retentions are increasing too.
Yeah. Okay. It'll be interesting to see what the quote is when we get it.
Yeah.
And Lynette is working on quotes with optional quotes at $1 million, so we can see what the price difference is going to be, because we kind of anticipated that being something that we would be discussing with you as well. So, and then my last slide here is just kind of a rough recommended timeline for the fiscal 23 renewal. And, sometime this fall, we'd like to introduce you to Travelers Insurance Company for a capabilities presentation. Around that time, we'd love to share some of our analytics with you based on some of the information, our loss analysis for workers' comp and for liability. We'll kind of show you what the opportunity is for efficiency by taking on either higher deductibles on the liability or possibly going self-insured on the comp. Again, that's something that we can all explore in the fall once we've had time to do the analytics. And then in January, February, because it's been the first time since we've really gone to market for the town, we'll really want as long of a runway as we can to meet with the town, the Board of Ed, to get as much information that we can to submit to travelers. Because when we're submitting, a submission to the insurance carrier, optics is everything, and how we present it to the carrier is so important. They'll, because if we can come up with all that information up front about what you guys are doing for risk management, maybe explaining some of the larger losses that you've had on the liability, anything that we can do to put you in a more positive light to the insurance company is going to help us get more better terms and conditions and pricing. So that's something we'll want to start earlier rather than later, ideally, and right after the new year. We'd like to start that process.
So Jason, on your screen here, it should be January, February 2023, right?
Yes, thank you. Yes, 23. That would be correct. Yes.
And Jeff, are you okay with March 1st for budgeting purposes?
Our budget will be pretty well submitted by then. That won't be adopted, but it will be submitted.
Okay.
So we would need something. I think the Board of Ed has to submit theirs even before we do. Our budgets are usually due the first week of January, and the Board of Ed has to turn in their budgets roughly the end of December.
Okay. Yeah, usually the superintendent of schools presents her budget the first week of February officially, and then the town manager presents his budget the first week of March officially. So if there's obviously these numbers will go up, but they can just pop those new numbers in, and it's going to make a difference, obviously. But
right,
they'll have to pop them in.
Yeah, so I think March 1st works then, right? Because that's before the town manager's budget. So
yeah, and we'll have the numbers by then. We may not have the application done, but we'll have the numbers.
Right. Okay.
So when would so that's helpful to know. So when is the town manager's budget due then? What would be a need by date for
first official week in March?
Okay.
So that March 1st, I think would be better if it's a hard date, or as long as we have a feel, I think, so the town manager can decide on what he wants to put in the budget.
Right.
Okay. And we'll still ask Kermit for their indication. So you'll still have that placeholder in your budget, just so that you know what you can expect for a ceiling.
Okay.
And obviously it can only go down. It can only go down from there. So
Perfect.
Jason,
Yes.
in the past, Travelers has been a player, not been a player, been a player, not been a player. Are they long-term playing in the municipal insurance field? I've been on this committee a long time. So just wondering.
Absolutely. And historically, and Jill can expand on this as well, Travelers is the largest insurer of public entities in the country. And they've been that way for quite some time. And I don't know historically what the community's experience has been with Travelers with the town. But in terms of the program itself, Travelers really appreciates clean accounts. So there has to be effort on part of the town to really work with the carrier on risk management, to work with the carrier on increasing the outcome of their claims. So it essentially, if a town decides or if it is not utilizing resources and is not managing their program well, Travelers is not going to keep renewing the account because they're not acting in their best interest to make themselves a good risk. So in that case, but it's not been a town problem for Newington. You guys run a tight ship, and it wouldn't be a concern for me. Jill, I don't know if you want to expand on that at all.
I've never seen Travelers non-renew an account. Even with if they consider adverse loss experience, they will certainly try to get some rate increases, and at that point they may kind of price themselves out. Right. From that standpoint. I know they did exit the Connecticut marketplace. I think it was many years before I came into insurance, but they did come back into Connecticut in 2008. And since then, they've been very eager to continue to grow here. They've got tremendous resources in the state. They've got, it's their claims, what is the name of it, up in Windsor. They've got two big buildings up there. One of them is, oh my gosh, why can't I think of the word? I'm sorry, I have terrible mom brain.
It's the fire center, right?
Yeah, but there's two buildings there. There's one with their claims people where you can actually go take a tour and kind of walk through a day in the life of a claim as a Travelers policy holder. And then the other one is their, it's probably like where the claims adjusters go and, they light buildings on fire and they have water damage and those types of things. They have some seminars in there as well. I went to one where they had a law enforcement folk come out, and a lot of police chiefs in the state took the time to go up to Windsor and meet with this gentleman and go through some trends in the law enforcement world. So they are definitely interested in investing in Connecticut and staying in Connecticut. I don't foresee them kind of pulling out like they did a long time ago.
Okay.
And if the town decides to move to have us do a proposal for self-insurance, we'll expand our net to include other carriers as well. But we can cross that bridge when we get to it. But all the carriers that we work with and Jill work with have all strong financials. They have local claims people. These are carriers that are vetted, that USI has relationships with, and we would never recommend a carrier to the town. For a savings today that would cost you later tomorrow. So in our experience nationally as a company in this space allows us to speak to that better than most anyone else.
So for now, Jeff, what do we have to present to the council?
Well, you were looking for a motion this evening, but it doesn't sound like you're going to be ready to have one. So I'm afraid that the council is going to have to act at the last minute.
The town council, the next town council meeting is next Tuesday.
No, it's this Tuesday. The next one's the 26th.
Okay. I will follow up with the underwriter from Kerma just to see where she's at. She was supposed to give me an update today, and I haven't heard from her. And so I will do my best to push her as politely as I can to get the committee a formal quote as soon as possible.
Well, because we'll need, for the liability, it expires on the 30th, correct?
That is correct.
Yes.
That is correct.
So if we don't have liability insurance on July 1st, all hell's gonna break loose. I would assume.
I know Ashley is the VP underwriting manager of Kerma, so I don't foresee her allowing that to allow that to happen to one of her members. So the biggest, last I spoke with her was on Friday, and she said her trouble was getting the quote for the $15 million umbrella layer, which was something that she was supposed to get today. So obviously she did not get it. Otherwise I would have heard from her. So I have her personal cell phone number, so I'll text her and see if she can provide an update and let us know when we expect to have a quote.
So you're going to wait to hear from her, and then you're going to let us know when we should have a meeting?
Yes.
So,
Right. So, Mr. Chairman, that may have to be a rather short notice.
right,
Uh,
like on the 27th.
Well, it's going to have to be before the 26th. Yeah.
Right.
Before the
20th.
28th, rather.
It's
Yeah.
the 28th, yeah. So the 27th would be that Monday.
Right.
I would be shocked if I didn't have a quote from Kerma by the end of the week. So that would give the committee all of the following week of the 20th to meet and make a motion.
Is the committee comfortable with that?
Can you give us the options again, when we might meet? Or when we need to be ready?
We can either meet, if we get the quote by the end of this week, we can meet on the week of the 20th or meet on the 27th. We have to meet before the 28th.
I will let Ashley know about the committee's deadlines, and I will work with her personally. Jill and I will work with her personally to make sure we have a quote, if not by the end of the week, but no later than early next week, which would allow the committee to make it. You will not have to make a meeting on the 27th. It'll be before that.
Okay. Excuse me. So I guess I will leave it to you, Jeff. When you get the information, I guess you want to try to schedule it for the right now for the 20th.
Well, why don't we try and plan on having the members leave the evening of the 23rd open on their schedules?
That's a good idea. Okay.
Then that will give us as much time as possible, with at the same time giving enough time to the council to consider as much as we can give them as well.
Right. Well, this is already on the agenda for tomorrow, so it'll be old business on the 29th. So therefore, we can act on it on the 29th.
On the
28th.
yeah.
I'm sorry, the 28th.
Yep.
I'm confused. 28th. So the good news is we can act on it right away.
Right.
We don't have to wait.
I would say let's try and leave Thursday, the 23rd open on your schedules.
Is that good, everyone?
That works.
Yep.
And this is a group that's used to meeting on Thursday instead of Monday. So
Anyway, right. Yeah.
in that sense, it may be better.
Okay.
I think it's really more just to pick a time that you're comfortable with.
Do the same 5:15.
That works for me, but I don't know about other people.
Hey, I couldn't do like 5:15. It's got to be later on.
Can you do 5:30?
No. I mean, Monday works out better. I don't know if it's possible, but.
What do the rest of you think?
Well, I'm good for Thursday or Monday, so.
Good for Thursday or Monday as well, and 5:15 or later is fine also.
Yeah, I can't do Monday. I'm on vacation, but somebody else can chair the meeting.
Well, why don't we plan on trying to have, as I say, you're used to meeting on the Thursdays.
Okay.
Well, let's try and meet on the Thursday evening, and I'll put in the minutes 5:15. If 7 o'clock works better, we can go for 7 o'clock, but or if that doesn't work, then I think then you're gonna have to meet on a Monday.
All right, that's the 23rd, Jeff?
Right, the 23rd,
That's the 23rd, yes.
Okay,
June 23rd.
all right.
So we'll call that at 5:15 on the 23rd. And that again is assuming that the town clerk is available to run a Zoom meeting on that date.
Right.
Don't worry, I'm good.
Good.
Okay.
Okay.
And and I apologize when I learned that the meeting was being moved to today, and I knew that we didn't have a quote. I assumed that the discussion here today that we had today would be meaningful, regardless of whether we had quotes or not. And then a follow-up meeting would be to do the quotes. So, like I said, we'll follow up with Kerma. Jill and I will work with Ashley to have a quote before the next meeting, and we'll also be prepared with a cyber quote as well.
Yeah, and I think this discussion was beneficial to the committee members, but at the same time, the town council does need to take action, so.
Right, we can't be uninsured for any time.
Right.
Understood.
In the meantime, Jeff, anything you get from USI, you can send out to us if it will
Okay.
help our understanding. Okay. Let's see then, any other public participation, any other business? So right now we're setting a meeting for June 23rd, and then we'll have one again in the fall to do the workers' comp section.
Right.
Okay, any public participation?
Nobody on with us.
Okay, any comments by members?
No, just to say thank you.
Yeah,
Yeah, thank you, everyone. Sorry for the short notice, but
right.
we'll get this done before the end of the year, fiscal year.
Yes, absolutely.
Okay, then a motion in order to adjourn.
So moved.
Second. All those in favor?
Aye.
Aye.
Bye.
We are adjourned. Thank you, everyone.
Thank you, sir.
Have a
Thank you,
nice
guys. Talk soon.
All right.